Welcome to today's webcast series presentation, Dollars for Design, Optimizing the R&D Tax Credit for AEC. My name is Beth Brooks. I'm the Director of Civil and Structural Engineer Media. Thank you for joining this webcast, which is sponsored by Brain Consulting. Before we begin today's presentation, first some general information about the webcast and the GoToWebcast platform. The views of the speakers and organizations participating in this webcast are their own and do not necessarily reflect those of Civil and Structural Engineer or its publisher, its WAG Group. If you have any technical difficulties while viewing this webcast, please submit questions or a brief explanation of your technical problem using the question tab on the GoToWebinar control panel, and a representative will assist you. During the webcast, you can also submit questions to our speaker using the same question tab. Submit your questions at any time, and we will try to answer as many as we can later in the webcast. The WAG Group encourages group learning for our events. If you are viewing the live webcast with a group on one registered person's computer, that person must complete and submit the multiple viewer registration form for the group in order for everyone to earn credit. Download the multiple viewer registration form from the Handouts tab on the control panel. Submission instructions are on the form. Today's presenter is Brady Bryan. Brady is the founder and CEO of Brain Consulting, LLC. His mantra is, how can I make my clients' lives easier? This fundamental question directs his constant efforts in the direction of Brain. Through vision and heavy investment into technology and infrastructure, he has made Brain a sleek, technology-driven, quality-focused organization that brings optimal value to clients. Brady is a staunch advocate of adding value to clients through tax credits and incentives, and through supporting businesses in continuous process and quality improvement initiatives. Starting off in Houston roughnecking in the oil field, Brady worked his way through college and promoted through various positions at the oil and gas company where he worked for 10 years. He achieved his BBA in management from Sam Houston State University, his Juris Doctor of Laws from Southwestern Law School, and is licensed to practice law in California and Texas. After law school, Brady worked at Deloitte for several years in the R&D tax group before founding Brain in 2010. Under Brady's direction, Brain now serves clients nationwide in industries such as architecture, construction, engineering, software, manufacturing, biomedical and pharmaceutical, food and beverage, real estate, and energy. He has brought together a team of professionals with a wealth of experience. The Brainiacs are lawyers, engineers, and accountants with extensive industry experience hailing from Big Four and other national consulting firms. Brady lives in Valencia, California with his wife, 3 children, and 2 French dogs. And now at this time, I'm going to hand it over to Brady.
Thank you so much, Beth. I appreciate that introduction. And I'm going to share my screen here and let me know what you can see, Beth.
Okay. Yep.
Now, are you seeing just the PDF or the slideshow?
I see the entire slideshow. If you want to push play on the slideshow, it should take up the whole screen.
Great, great.
Yeah. Perfect.
Well,
looks great.
Perfect. Well, thank you everyone for joining us. Thank you, Beth, for that introduction. Today we're going to be talking about dollars for design, optimizing the R&D tax credit for engineering and architecture. I really want this to be very useful and for everybody here and for the audience. So I definitely welcome questions throughout, and we've got a couple of questions to kick us off here after a little bit more of a background, and would really love to hear from all of you. And if you don't feel comfortable asking the questions here, feel free to contact me and we can chat offline. This is our biggest sales point is our people here at Brain. It's our leadership team. As you'll notice, everybody at Brain has alphabet soup behind their name. We have a team of attorneys, we have an engineering team, and in fact, in at least one state, we're a licensed engineering firm, just by nature of what we do with research and development tax credits, 179D, 45L, and cost segregation. So that's a little bit about us, and yeah. And these are Brain's official mascots, Hercules and Zeus, my two French bulldogs. And I'm still trying to figure out, Beth, how we can get them at Zwag. I think they'd be a hit. And this is a little bit about us. We are definitely very involved in the architectural, engineering, construction industry. Let's see, we work quite a bit with Deltek and Viewpoint and other software firms as well. And we really support clients and support CPA firms in helping to optimize, obtain, and retain these tax credits. And really kind of a background for, covering a little bit more with the folks at Brain is everybody at Brain is a Big Four alum or other national consulting firm alum. And we really have a lot of in-house experience. I've got 10 years at an engineering firm out of Houston, global engineering firm, National Well Varco. And for example, Kevin Sullivan, he's our director of engineering and a partner at Brain. He's got over 10 years experience as a civil engineer, one of Texas's youngest licensed engineers, I believe, designing and building bridges there in the Houston area. So it's kind of a similar story all around at Brain. How we do business, we're a fixed fee firm. We come in, we provide a free phase one assessment. So whatever the case may be with R&D tax credits or 179D, we come in, we provide the estimated tax credits by year and jurisdiction and fixed fee options to go about it. And at the end of that, we have a comprehensive deliverable, which is more of a time capsule that supports what we do, how we do it, and the legal justifications behind that. We have more than a 90% sustention rate under exam. Very good track record with the IRS and state authorities. Today, we really want to be talking about what is R&D and going a little bit deeper into funded versus unfunded. There's a lot of discussion on that more recently, especially with some of the case law out there, debunking the myths of the R&D tax credit. And really, this is kind of the focus and the name of the title of this is learning how to optimize time, optimize the incentive, utilizing time tracking and various techniques to get there. And by the end of this, I want everybody to walk away with a better understanding in general and understanding target-rich environments and time categories for R&D activities. That said, let us kick this. Let us start this party off with a polling question number one. Beth, do you want to do the honors for us, or? So really here, and we'll give everybody a minute. What is the main reason you decided to attend this webinar? A, I have limited knowledge of R&D and or 179D deduction and wanted to learn more. Our company has claimed either R&D or 179D and wanted more information. C, most ZWAG webinars are very informative and relevant to us. Or D, other. We'll give everybody just a minute. Great, great. I'm loving the answers here. And Beth, just let us know when you want to close this out. So I love the answers here. More than half, almost 70% say they have a limited knowledge of R&D and or 179D and wanted to learn more. And then the next largest group, over 20%, most WAG webinars are informative and relevant to it. I love that answer. It's a great organization. And then so we next polling question will give us a little bit more information. Polling question number 2. For those not taking the R&D or 179D incentive, what is the reason for your hesitation? A, I am not familiar with these incentive programs. B, what we do does not qualify. C, the process to claim the credit is too exhaustive. D, we will be audited. These are great. Guys, keep the answers coming in. And it looks like it's kind of tailing off there as far as responses. 59% voted. Give a couple more seconds. All right. I guess at your discretion, Beth, we can close it out. Oh, it is closed. Okay. So I love the answers here. So this kind of corresponds with the answers from the last question. And so what we definitely are going to be addressing over the course of the next 45 minutes, B, C, and D, what we do does not qualify. C, the process to claim the credit is too exhaustive, and D, we will be audited. So those are what we call the myths of the R&D tax credit, and I hope by the end of this presentation to dispel those myths. Really quick, this is a high-level overview of the R&D tax credit. You can really think of the R&D tax credit as a person. So it's almost 40 years old. So as you can imagine, a 40-year-old person has changed a lot from the time they were an infant to the time they are now, and think about everything that's happened in between: the teenage years, the college years, the fraternity, sorority, first starting professional life, and now married with children. And it's really a similar lifespan for the R&D tax credit. When it first started in 1981, it was really very difficult to take. Really, the true legislative intent behind it was to create a brain magnet for the United States, and to offset the brain drain, to counteract the brain drain that was happening in our professionals leaving the United States after going to universities here, and also the outsourcing of high-tech jobs overseas. And so this is really to counteract that. So creating a brain magnet for the United States, hence the name of our company, Brain. Number 2, there's a broad definition of R&D, and we're going to be going more into that. And really, back of the napkin number, up to 9% of qualifying wages, and we're going to talk about wages typically in architecture and engineering. That's the primary driving expense. Really, up to 9% of those qualifying amounts can qualify. So let's say you've got $1 million in qualifying wages. Let's say you've got $3 million in total wages. Let's say $1 million qualifies. You may have a $90,000 federal tax credit, and then about 40 states have similar tax credits, and so that would be on top of that. And you can typically go back in time. You typically have 3 years at the federal level to amend. Some states allow you to amend, some states don't. A state like California lets you go back 3 years. Other states are prospective in nature and require you to get certification in some form or fashion, or an application. For example, Hawaii requires a certification process, and then a state like Arkansas or Pennsylvania requires more of a prospective application approach. So in either case, you definitely want to retain the services of a qualified consultant in this. And so that's really the R&D basics. And feel free to send out any questions as we're going through this. So what we do every day. So going back to what we do does not qualify. Just intuitively, what you do as an engineer and an architect is certainly within the sandbox parameters of the R&D tax credit. So maybe not everything you do qualifies, but we're in the right sandbox. Okay, we're certainly in the ballpark and certainly in the sandbox here. So what the purpose of this slide is to demonstrate on the left, that's the law, that's the 4-part test we need to meet. And on the right is what typically happens in an engineering or architectural design process. The top left is kind of what you would proffer forward to the client in the conceptual design phase. On the right, top right, maybe what the client has in mind, kind of like a Disney Symphony Hall type thing. That's the Cleveland Clinic. And then bottom left, that's you having to go back to the lab and actually make it happen. And the right is the iteration, all the revisions back and forth with the client to make it happen. If you're doing that, guess what? You're doing R&D for purposes of the R&D tax credit. That involves new product or process, technical uncertainty, technical in nature, and process of experimentation or iteration. So really, I love this slide for that purpose because it demonstrates, a lot of what may happen on a day-to-day basis. And just as a matter of course, engineering, architecture, it is inherently iterative, it is inherently technical in nature, and inherently uncertain, technically, objectively uncertain as to the most appropriate method and way to get to the most optimal outcome. So this is digging in. We're going to have hopefully not put anybody to sleep in here. This is the law. This is the 4-part test. Okay. We need to be doing something that is new or improved as it relates to a business component, a product, process, technique, formula, invention. And so we're improving functionality, performance, quality, reliability, or durability. Any of those. So we're doing something new or improved as it relates to a product or process. And I like to cover number 3 next because number 1 and number 3 are usually the first hurdle. Technological in nature. Guess what? Hey, I'm talking to a group of architects and engineers here. Process of experimentation is based upon engineering, physics, chemistry, biology, computer science. So we're talking about the hard sciences. Now that's removed from the soft sciences, the social science, political science, pure marketing. So again, when I said we're right in the sandbox of R&D, this is what I'm talking about. We're inherently making daily decisions based upon the principles of engineering and architecture and constructability and computer science and the laws of physics. So 1 and 3 are usually really the first hurdle, and the next two, number 2 and number 4, uncertainty and experimentation. So here we're talking about objective uncertainty and experimentation, and this is hand in glove. So maybe we don't know the best or most appropriate design of this building or this project or this this wall, but you know what? We're gonna design it until we get there. And so that's the process of experimentation. So it can be, your traditional scientific method, if then null. Most people it's not. Most people it's systematic trial and error, revision 1, 2, 3, 4, 5, and as many as it takes to get to where we need to be. And really, what I like to say is the proof in the pudding of experimentation. And if there's an exam, the IRS wants to see evidence of experimentation. Proof in the pudding is any revision beyond a revision 1, because we're not a bunch of one-take Tonys here. It does take systematic evaluation to get there. And revision 1, we do red lines markups, revision 2, and we're going to do it until we get it right. And so that is proof in the pudding of it, not only experimentation, but objective uncertainty. Because if we were not technically uncertain, every model, every drawing, everything we did would be a revision 1. And so that's really the 4-part test. And if there's one thing I can send everybody here away with, is that this is a very broad definition of research and development. And in fact, I like to call it more of a design credit. The code is called, the technical name and title of the code is a credit for increasing research activities. It's not called the R&D tax credit. That's just a name we've adopted over the last 40 years or so. So that said, it's a really broad definition, whereas my grandpa would say it cuts a wide swath. Very wide definition, wide example of what can qualify for the R&D credit here. Any questions? Beth, are you seeing everything come across on your side so far?
We do have a question. We do have a question. Would you like me to go ahead and read that aloud?
Oh, that'd be great.
This is from Derek. He asks, most revisions I've dealt with are based on cost and or customer preferences rather than technical. Does that qualify?
You know, that's a great question. And on the outset of that, the answer is no. However, if we dig deeper, let's talk about a facade. So client wants a certain look. How do we achieve that look from a technical perspective? Do we have to deal with, test different types of facades? Are we testing the safety, the tensile, the yield, the weathering, the durability of that? Is this stuff going to chip and crack and fall on people? So if the underlying, design and development and time is spent on that, we can take that time, but we won't take time, like budgeting and whatnot. So certainly every single project you get is going to be based on budget somewhere, some form, some fashion. That's going to be the highest level. But then now for example, Ford may have to produce a car for $30,000, but now we've got to come up with the look and the design and what all needs to happen inside there to make that happen. And that's really where the rubber meets the road, and really where the technical, the technical comes out. Because, another way to look at it is, if it wasn't, technical in nature, they'd have a bunch of folks, they could hire non-technical people for probably cheaper to go in and do the same thing. So the reason, we employ engineers and architects and designers and drafters and modelers is to go in there and do the technical iteration it takes to achieve that design and make that project come in at a budget. And I hope that makes sense. And great question. And if there's any, definitely, if you need me to elaborate on that, I certainly can. So number one, the four-part test, the definition of the R&D credit can be very big, but it's not everything. So there are some very narrowly tailored exclusions, and a lot of these are kind of referring to several of the same but restated. Funded research, which we'll talk about more. R&D performed under time and materials or cost basis contracts can sometimes be excluded. Fixed fee and lump sum contracts generally not excluded. R&D performed outside the United States, that's considered foreign research. And at the state level, that's a feet on the ground test. So if there's a state with a tax credit, they usually like that research to occur in that state. So we would really have to look at the employees within that state and the research happening there. R&D after commercial production. So typically, and we'll go into that a little bit more. So let's table that one. And then, generally, and this kind of goes back to that original question, determinations made upon, purely on budget and cosmetic, what the client wants. So anything that's purely cosmetic or aesthetic or seasonal type design decisions is not going to qualify. But if let's say the marketing team is working with the client and they say, hey, we want it to look like this, and we want a bunch of elephants and designs in the side of the building. Well, now your engineering team has to go in and make that happen. And so it may be aesthetic or cosmetic at the top, but then we have to go in with our engineering team and make that happen at a technical level underneath. And an analogy in another industry is, let's look at the cosmetic industry. So whether it's Revlon or any of these makeup companies. It's very cosmetic. It must work well. It's got to smell good, somewhat taste good. I think Americans eat several pounds of makeup per year, but it's got to make you look nice, and it's got to look nice in and of itself. But a lot of these companies will employ many chemists and quality assurance folks and all down the line. And certainly the underlying design and development there would be considered R&D. So I hope that makes sense there. So we want to spend a little bit more time just in general, sandbox what we're doing. Again, what that original reservation, what we're doing does not qualify for the R&D tax credit. And this is just in general, the R&D tax credit, the most target-rich areas that potentially have the highest potential to meet the four-part tax credit, the four-part test, is the conceptual design, schematic design, design development, and construction document phases, and some on the construction bidding phases. We've even had IRS agents liking some of our clients' projects in the contract construction administration phases as well. And the administration phases, one example, a vendor pulled out of a certain region, and that was our entire design was based upon that of the exterior shell of the building. And so we had to go back to the drawing board and in fact manufacture our own components to do, not us, but the client, speaking from the client's perspective, to get there. And so, typically, and going back to the prior exclusion, R&D after commercial production, typically when the shovel hits the dirt and we start having moving equipment out there, R&D typically just trails off tremendously for A&E firms. But that's a good example of where R&D can happen after construction. So in general, these are the areas where R&D can happen on the left, and on the right is typically where it trails off or it's tougher to meet that test. And I like that slide for that purpose. Beth, have you seen any questions come in here?
I do. We've got another one.
Okay.
This is from Ahmed. How can we use this tax credit, or how can we apply this tax credit for our office expenses?
That's a great question, and office expenses are typically not included, and I'm going to go more into the type of expenses that can be included. So that's a really great question, Ahmed. And I'm just putting that off until I've got in this conversation where we cover it a little bit closer. I love this slide for another reason, and kind of going back to here. This is kind of going to the crux of the basis for this presentation, which is optimizing the tax credit. So most of everybody listening does some kind of time tracking, whether it's done through a formal accounting software or done informally via, QuickBooks or spreadsheets or something like that. Most people are doing time tracking. And the way that's one of the reasons we love working in A&E. In fact, more than 50% of our clients are in architecture and engineering. It's because you do such a great job of time tracking. And folks usually are tracking their time to these major phases. And that's going to be very helpful, particularly in the planning and program conceptual design phase, and making sure that's not, going into a bucket like just general marketing or GAA or something like that. And if it is, it's not fatal, we can dig in. But really, we like to start from the time tracking as a starting point to help build this out. So the time tracking is the quantitative, and really approaching your firm and understanding what you're doing, how time is being entered, how activities are occurring at your firm. That becomes more of a true consulting process and really understanding. And so making the qualitative meet the quantitative, or marrying the two, if you will, building that bridge. And that's really the whole crux of everything we're talking about today, is using this, making that building that bridge as tight as possible, and building this nexus as tight as possible. Because if there is an exam, there's no better support than having accurate time tracking and a qualitative understanding that marries the two. So that's another great purpose for this slide, and also the next, because and I love this slide for two reasons. Number one, it shows all of the types of things in general at a practical level of persons that can qualify, and also the level of qualification. So top to bottom there, the red down to the blue, red is going to be the highest qualifying percent that we typically find, anywhere from 10 to 100% qualifying. Down to the blue is, typically not too highly qualifying. And the reason this is important as compared to the last slide is making sure that we're appropriately tracking time, and I'll go into that more. So architects, engineers, CAD, BIM, designers, your true technical folks, that's going to be your most target-rich environment. So the left diagram, it's showing like a dartboard, right? That's your bullseye. That's going to be your target-rich environment, as Maverick from Top Gun would say. Goose, we've got a target-rich environment. And as we go further out, it's going to be still qualifying, but usually qualifying at a lesser degree. So from a temperature perspective, it's going to be cooler as we go out. And so your partners, principals, VPs, department heads, why do I include that? Because the R&D tax credit lets us take a level above and a level below that core group. So level below a level above, that's going to be your technical supervision, your direct supervision of that. And it doesn't have to be a direct report. It could be your C-suites, partners, principals, VPs that are providing technical guidance. They're guiding the technical traffic, so to speak, as the project is progressing. And then direct support includes people. It can include your job captains, your project managers, your QA engineers, as you move out. And direct support, the IRS gives us a definition of an executive assistant or a secretary transcribing notes on behalf of an engineer during an R&D project. And it's really more of a but-for test. But for their help, the R&D wouldn't have been as feasible. And then the further out you get, the interior designers and user experience, user interface, that's going to be less qualified, even down to 0. And that also can include salespeople. You can have salespeople that actually have some qualifying percent as well, because maybe they're relaying the technical traffic. But you also could have interior designers that qualify as well, particularly when they're dealing with more of the technical issues like lighting design and achieving, the right color and temperature and lumens necessary for spaces. So this is more of a generalized chart, but it also coincides nicely with the last one, because, it's all about what we can prove. It's all about what we can prove. And on the time tracking, making sure that people are accurately putting in their time, and going really, why is the orange category so important there? The partners, principals, the VPs, is because they're also a lot of the more highly compensated individuals, and they're also more likely to throw their time into marketing or GAA or something else when they very well might have qualifying time there. So it's something to consider, and it's not fatal if it's not tracked to every single project, because sometimes it goes into buckets and time on bids and things like that. And we can go in and carve that out a little bit to flesh that out and forensically reconstruct that time period. And so, Beth, do we have any questions there so far?
We do. We've got another one from Dustin. Would this credit qualify for a sub-consultant BIM services firm?
It potentially could, and that is a great question. And we're going into that, and so you can look at it from a couple of ways there, Destin. And this goes to also a prior question and to Destin's question. The types of expenses we can take for R&D, these three are the primary expenses that we're looking at: wages, supplies, and contract research. And so going back to Amit's question on office supplies, the typical definition of supplies is anything non-depreciable in the hands of the taxpayer. So that's tax speak, but things that essentially don't have a life beyond a year, and they are used, exhausted, destroyed in the R&D process. That's the typical definition. But this can also include prototypes and prototype component cost that may, it may be end up as a glorified paperweight and last longer than a year. But it's really, everything is a case-by-case basis. But that's the general rule there. And unless you've got office supplies that are, physically being used and exhausted and destroyed in the process, it's probably not going to be a good argument there. However, 3D printing and the cost of the additives and supplies used into that for your models and prototypes, very expensive, and certainly we can use that. That's a great question. Going back to the, I'm sorry, Beth, what was the prior question? Oh, BIM model or contractor. So going back to contractors, if we are the engineering firm, we're the engineering firm and we're outsourcing the BIM, if we are paying them at a time and material basis, essentially either as a 1099 outside employee, or even just at a time and material basis, they're charging us 5 hours or 10 hours or whatever, then we can take 65% of that time. But if they're charging us on a fixed fee basis, so they're going to charge us $5,000 per model or something like that, then the credit related to their wages really belongs to them. And so the whole explanation of that 35% haircut is really, I guess, excluding any overhead or anything like that. Because now going back to wages over here, that's the dominant driver for any architecture engineering firm, wages. And we look at their box 1 W-2 wages. Now, in some states, they do allow for LLCs of some of these professional companies. And in that case, we would look at, or even at the individual level, we would look at a portion of self-employment earnings. So, self-employed architecture engineers operating as a solo practitioner, or a partnership or LLC, then we could look to that for defining their wages. But in general, 99% of the time here, or at least 95%, the box 1 W-2 wages, that's the stripped down wages, what's taxable to the employee, is what we use as the starting point for what could potentially qualify there. Then we develop the percent of qualifying expense, and that percent is going to be based on, that's really where the magic happens. That's where the rub is, and that's part of this conversation, is optimizing your credit based upon that, using objective information, and time tracking is the best way to do that. And in going so, speaking on that, whether it's Vision or a Jira or BST or Clearview, or even spreadsheets. But in any of those softwares, we've worked very closely with some of these firms in developing ways to extract these reports. In fact, a lot of times the clients will just give us a license temporary license to dig into that and extract the reports we need, or we'll walk them through that virtually over the computer, sharing a screen and walk through that. And really that percent is where the magic happens. That's what a lot of these exams are about. How do we get to that percent and go from there? And so That's the whole overview of qualified research expenses. And Beth, I wanted to take a second to see if there's any questions thus far. We've actually covered a lot of ground and a lot of information, and now we're going to be getting into some examples here.
Yeah. Are you ready for another question?
Yes.
Okay, this is from David. Can real estate brokerage firms use this for things like GIS research, test designs for clients, etc.?
Oh, that is a great question. And the answer is yes, they certainly can. But there's so many metaphors I can use here. The devil's in the details. Or Beth, is the best phrase I learned in law school, it depends. And everything is going to be a facts and circumstances test. And so case by case basis, we would have to look at it. But yes, we have helped development companies take the credit, especially when, you know, maybe they have their own in-house designers, and, you know, they're really doing everything from, you know, master planning of communities to site development, and going from there. So there is an opportunity for R&D, honestly, almost at every level. And this goes to kind of back to Destin's question, almost at every level of the design and construction process. So if everybody, you know, typically folks are operating under a percentage completion or time and percentage complete or lump sum fixed fee contract, let's say an AIA type contract where you got your architect, your engineer, your specialty subs, your GC, everybody's working on a certain fixed fee on that. Everybody could be eligible for their own respective portion. Now, certainly on percentage of wages they can qualify, your architects and engineers are going to have the highest percentage of wages. And our internal data set, I think that average is probably about 30% of wages, 27 to 30%. And then your specialty subcontractors are going to be the next highest. And then you'll even find general contractors that can also have qualifying as well, but they're going to be at a lower percent than most of the others. But still, a lot of those firms are very large and it can add up pretty quick. So, great question. Here is an example. Now that we're done with kind of a lot of the dry law, this is a great example. This is a architecture and engineering firm. They've got both architects and engineers here, and they do everything from civil to general architecture, and most of their R&D is going to be found in schematic design, design development, and construction document phases. And these folks start taking the project over. Then they don't spend an inordinate amount of time on the conceptual design. And so this is a $4.5 million a year company. Their payroll is about $2.5 million, and their qualified research expenses are $900,000. And just kind of a ballpark there. 900 divided by 2,500, that is 36% of wages. So that's right in line with my estimate. So typically the smaller, the less non-technical folks are going to have, and they're going to have higher qualifying percentages. And so I believe this is a Texas client. They get almost a $50,000 a year federal credit, a $27,500 Texas credit, and in total about $77,000. Now, as I mentioned, this is a tax credit, a dollar for dollar reduction in tax liability. And you can typically go back and amend, as I mentioned earlier. And so if you can go back 3 years prior, and let's say you have the current year, you're probably looking at anywhere from $200,000 to $250,000, this particular client. So it adds up pretty quickly. And the credits pass through according to ownership at the S Corp level, or at the C Corp level, it stays with that C corporation. And whatever is not utilized in that tax year can be carried forward for up to 20 years of the date of generation. This is probably one of the biggest issues that we see is funding. And a lot of engineers and architects say, oh, funding must mean billable projects. And au contraire. And another great thing is the top 3 cases in R&D here are all engineering companies: Lockheed, Fairchild, Geosyntec. So number one, if you think, oh, R&D is not for us, what we do doesn't qualify, this is proof in the pudding. And also there's a recent article by ENR out that's kind of discussing the controversy over AECom. They get hundreds of millions of dollars in tax credits. There's $148 million R&D tax credit utilization, other 50-something million carry forward. Very huge credits. So if you're doing anything like Lockheed Martin or Geosyntec or Fairchild or AECom, you likely have an R&D tax credit. So funding in a nutshell. So to not be funded, we want to have some kind of rights, and we want to have economic risk. So to be funded means we have no economic rights. No rights to the research and no economic risk in the outcome. And I hope that makes sense. It's kind of confusing here. And this also goes back to Destin's question on the BIM modeler. So as a BIM modeler, we're doing work for an engineering firm. And we're charging them a fixed fee, let's say $1,000 per model. Well, in that case, the development that we're doing, we can take. Why? Because we have to develop a true and correct model, and it's got to be a functional model that's integral, and maybe with the other components within the construction industry, the entire chain. So it's got to work, it's got to be functional, and we've got to be successful in order to get paid. So when we bill, we deliver a successful model pursuant to the specifications, and then we can take our credit related to the wages on the really the significant level of design in that modeling process. So probably not everything you're doing as a BIM modeler is going to qualify, but certainly when we're going around the LOD, the level of design, and really doing innovative things related to BIM, that's the magic, and that's what we can easily qualify. And we're performing under fixed fee, so there's economic risk. Let's say we have rights to the maybe not even the actual research itself, but rights to the know-how and the development, our internal processes on that level of design. So Destin, going back to your question, if taxpayer A, BIM modeling company, are folks involved in the LOD on that model that we can easily identify and articulate and carve out those hours for, or estimate at least, we can get a tax credit on that. Now, let's say we're doing it on a time and materials basis. We can't. Who gets the credit? It's the architecture, engineering, or construction company that's hiring us to do that. Why? Because the risk lies with that company, because they're paying us time and materials. We don't have to deliver a successful working product. And in practice, we probably do, or else they're not going to hire us again. But we look at the 4 corners of the contract test. It's a legal definition. Absent any ambiguity, we're stuck to the 4 corners of the contract. And so we would look at your proposal, any statement of work, and could be your overarching contract and agreement, invoices, whatever you may have. And usually at this level, it's probably a proposal and a purchase order and an invoice and a check. Hopefully you're getting checks. So that's the things that really evidence the contractual relationship there. And then rights. As an engineer or an architect, you really don't have to, retain the blueprints or anything like that. Really just the rights to that know-how. As long as you don't have to pay a royalty or any money related to that, that's enough. Rights is usually not the difficult thing to meet. Risk is usually the deal. And really the most recent case there, the original case was the Fairchild case. So going back to the myth that, what we're doing doesn't qualify because we're receiving money Fairchild building jets for the Air Force and Department of Defense, they're certainly receiving money. And guess what? They got to keep that credit too. So in that case, every milestone, they had to prove that they created a successful working portion of that jet in order to get paid. The wing flaps, the integrated control systems, every single step, they had to show that. And guess what? They still got the tax credit because they showed the onus was on them to show, hey, we don't get paid unless we deliver something successful. In the same way, on the, let's say, Geosyntec. Geosyntec had fixed fee cases. The IRS said, that's okay. We're going to give you the tax credit related to that, or at least the tax court said. And they kept the credit related to the fixed fee cases. But where they lost out was the cost plus contracts, where it was cost plus with a cap. And so regardless, they were going to be getting a piece of the action on every single one. And, you know, example, they would be paid unless. So it was a different shifting burden there. So example, bench testing, soil bench testing, there's really no way to fail there. They deliver the results. It goes through a spectrometer. Here's the soil. Here's the chemical composition and reaction. It's just something that they would do monthly and get paid by that city authority or agency monthly, unless there was some problem with the report or the hours or something like that. So it really wasn't even a technical issue on the billing. It was more of a procedural accounting issue. And so I hope that helps there on the funding. That's really most of the issues related to A&E. And that also helps at Brain to have a team of attorneys and engineers that we can help, that we can hand this off to review contracts. And really that's another thing is in your system. And this goes back to optimizing the tax credit, making sure that we are accurately accounting for these projects. And, you know, having one single regulator that is, as you are entering these projects into the system, again, it doesn't matter if it's Vision or a Jira or a BST or Oracle or whatever the case, entering in the projects correctly is so helpful, because otherwise we may have to go through every single project and every single contract, which we can do and we have done. In fact, we do that on occasion. But really where you're going to get the best value is making sure that, you know, for example, only your person in charge of contracts or your business manager, controller, CFO, that knows how these contracts works are entering that information in. Otherwise, you know, if you've got everybody entering in projects, it may be like, I've seen a civil engineering firm, which I'm about to show you an example, where everything was listed as T&M because that's how they think and that's how they propose. And then, you know, we go in and half the projects, it clearly says fixed fee, and the billing and everything is done fixed fee on the actual project itself. But we think in terms of time and materials, because even sometimes in the billing, we're thinking about percentage completion, and that's done as a portion of the T&M that we've invested, and you know, as a way to bill on the percentage of completion. So it's important to look at the four corners of the contract, understand what kind of contract this is. And I love to talk contracts. I love to talk tax. If you have any questions, you can always call me on that. That said, we have we're getting about 5 minutes till here. So again, I love case studies for this purpose. This is an example of one civil engineering firm. They have geotechnical and civil engineering. And this was the one, everything we do, Brady, is time and materials. But by the time we looked through, we found 50% of their projects were based on fixed fee contracts, unfunded, even though they were billable. And they also had significant time in internal R&D projects with the, remember there was a question from somebody on development and GIS. They're inventing new GIS technologies, combining ArcView and Esri ArcView and all of these with various drone imaging and satellite or mapping technologies and other data sets as well for their own clients' purposes. So they're really kind of becoming their own regional Yelp of GIS, if you will. Anyways, long story short, $20 million a year in revenues, about half that in payroll, and then $2 million in qualified research expenses. They'd have more than that, but remember, half of what their projects off the top won't qualify because they're considered funded. This client is in a state that doesn't have a tax credit, but only federal, and only federal at $125,000. Now, mind you, they can go back 3 years, and so we're looking at $375,000 to $400 plus and change for this client. So it can add up really quickly. Really quick recapping before we go to Q&A. Our firm is too small. The R&D tax credit, and in fact, a lot of things recently have been changed to help smaller companies take advantage of it. Number one, 2015, it was made permanent under the 2015 PATH Act. And also for companies that maybe are new and they have less than $5 million a year, they can offset payroll tax with it. And so this is, another way to help smaller, newer companies take advantage of this. So if you have questions on this, would love to chat with you. And then another question is what we do, or a myth, what we do doesn't qualify. This was the main one. Again, if I can give you just one takeaway, R&D, if you're in architecture and engineering, you're within the sandbox of R&D. The definition cuts a wide swath, as I mentioned, my grandpa used to say, cuts a wide swath. It's not just for white lab coats and graduated cylinders. R&D includes improvements in process and products. And in fact, over 65 industries, different NAICS codes take the credit in IRS publications. Another question, the processes are myth. It's too exhaustive. And really, again, and that's why I like to focus on the data, because I would rather be a fly or kind of operate like special forces, get in, get out without anybody, knowing we're there even. And that way you can do what you do best. We can do what we do best. We can get in your software or work with your Vision or Jira or software person to get the report that we need, the data download. And that's the start. And really, it's about, making sure that you get that free initial assessment. It's, I would say definitely get a phase one. It's no cost, no obligation. It's probably going to take you and your firm max 2 hours to do that. It's going to take us a lot more, but that's on us, and we would love to do that and show that for you. Polling question number 3. We're going to quickly go through this. What job costing software does your company use? And then I'll let Beth initiate this. And this is great. Actually, more people are logging on towards the tail end of this. And we got some really exciting stuff, so make sure you stay on the line. So A, Deltek Vision, B, Deltek Vantage Point, C, Deltek Jira, D, BST, or E, Other. And it is now closed. We've got 20 with Vision, 18% with a Jira, and 61% Other. Man, I love these choices. I would love to hear from others on what other systems they're using. Thank you for that, Beth. And then finally, hey, we're going to get audited. You know what? What we call the holy grail in the R&D world is having time tracking plus a qualitative information marriage. So time tracking is the holy grail in supporting the R&D tax credit. And so really there's a 5% chance or less of getting audited. And so it's the same chance that my orthopedic surgeon gave me for problems arising from a herniated disc repair in my neck. Still significant, And so in that case, well, I haven't had surgery yet, but I would definitely use the best orthopedic surgeon that I could. And the same analogy, use a firm that's got a group of good attorneys and engineers and folks that have had, a long history of doing this and support. So, support to back that up. We can cover this more, but I know I've reached our time here. The IRS, they do have a group of folks. It's a coordinated issue at both the LBNI and the small business level. So things are actually improving. I would there. So I would say definitely talk to a qualified consultant. Make sure that you steer clear of people offering you a contingency fee, because the IRS will ask for a copy of the contract between you and your consultant. We are fixed fee. Fixed fee looks a lot better in my opinion. And then time and project tracking is also very, very strong. Not absolutely critical or fatal if you don't have that, because there's a Fifth Circuit Court of Appeals opinion, the McFerrin case, that supports estimates. So not fatal if you don't have it, but great if you do. In either case, we'd love to help you. And then we'll skip through that. 179D is about to be extended. Thought I'd give that update. Well, hopefully it will be. We're keeping our fingers crossed. We're expecting a September or October extension on that. And that is up to $1.80 per square foot deduction for work on government buildings if you qualify. And then 45L is 179D's brother. That is also up for extension. We're hoping same time, September, October. Let's stay tuned on that. Last polling question, and I know we've gone over a couple minutes. Beth, if you could open the gates on this polling question. Polling question number 4. Do you view these tax incentives differently now? No. We will continue to claim them using our current method. What does that say? Our current provider. No, we are still convinced that we are eligible to claim. Yes, we are interested, or no, B is we're not convinced. C is we are interested in exploring one or more of these previously unclaimed incentives. D, yes, we are interested in a different approach service provider and seeking these incentives annually. So would love to hear from everybody on that. And then this is great. Okay. And this is I love these answers, and thank you everyone for that. I would love to connect with everybody on LinkedIn before we jump off. But Beth, I know we've run our course here. As you can tell, I'm somewhat passionate about tax credits for A&E. But do we still have time for some Q&A?
We do. We have a few minutes for a few questions. Let's dive in. Let's see. For the funded contract to issue, how are T&M with a cap / not to exceed limit treated?
Okay, that is a great question. And really, the devil is in the details there. We would have to explore that contract. We would have to look at a number of things in there. So it's not necessarily going to be qualified or disqualified. Certainly when I see that, I'm kind of like, I tend to think it doesn't sound great. But again, we would have to explore that contract in its totality. And look at all the provisions in there, things that it's going to include fee, scope, billing, delivery, invoicing, inspections, warranty, all of the clauses in there. There's a number that are going to affect the outcome there. And there's always the case. It may not be like any particular contract that we've seen a case decided on, like either Lockheed or Fairchild or Geosyntec, and it would then potentially come down to a question of whether or not to claim dollars related to that project. and potential exposure related to that. So that's a great question. So at the end of the day, I have to defer to my old law professor's phrase there is it depends, but I would love to talk offline and provide a phase one and speak a little bit further about that.
Okay, I think we have time for one more, Brady.
Right.
If the engineering firm works for the architecture firm and not directly for the client owner, do both firms have an R&D tax credit, or can the architecture firms take the engineer's contractor cost?
In most cases, Beth, every level in that design and construction process is going to have their own respective credit related to their own qualifying wages. Because most of the time they're at a lump sum, fixed fee, or percentage completion relationship. If it's a pure time and materials, that's very rare to have. Then that would belong to, the credit would belong to the taxpayer paying that time and material basis. But again, it really depends on the specifics of every one of those. That's a generalized answer and a generalized question. And so any specifics I would definitely love to speak further about.
Okay, all right. That's about all the time we have now. Brady, I'm going to take back over the screen if you don't mind.
Perfect.
Okay, all right. So as we finish up, please download your certificate of completion now from the handout section. A lot of people end up missing this. I'm going to send a follow-up email within the hour after this event has closed to all of the people who have attended today. I will have a link as an attachment for you to download the certificate of completion as well. So if you log off here and miss it, don't worry about it. I'll be sending an email. Keep an eye out from it. It's bbrooks@zwagroup.com. If you missed our note at the beginning and you are watching the live webcast with a group on one person's computer, please download the multiple viewer registration form and complete and submit the form to receive the credit. We need this information in case you are audited and we are contacted to verify this continuing education activity. Also, this webcast has been recorded and will be archived on csengineermag.com/continuing-education. If you watch the archive video, you must pass the quiz in order to download a certificate of completion. That should not be relevant for any of you watching this live one. You don't have to take the quiz since you're watching it live. A PDF will be available with the written answers to all of the questions submitted during today's webcast. You can visit csengineermag.com/continuing-education in 2 to 3 business days to view or download the complete Q&A for this webcast. And that about wraps it up. Thank you, Brady, and thank you to all of the attendees.
Thank you, everyone. I really appreciate it and certainly welcome any additional questions, contacts, and connections. Thank you, Beth.
Thank you.